Good morning and happy Friday. Jordan Keck here, your complicated deal guy with your weekly market update. Kicking off with interest rates, pretty close to unchanged week over week. 6.85% last week, coming in 6.83% this morning. Looks like that may go higher later today, though. Market's already starting to deteriorate. So a lot of volatility here. I would just start planning expectations for higher for longer. Rates are going to be higher than we'd like for longer than we'd like. More that we can help home buyers start getting into that expectation, hopefully moving sooner than later, because they don't want to wait until rates continue to go up. Buy now while they can. Strangely enough, this might be the lowest we've seen in a while. I don't know. Nobody knows where rates are going. But going into our weekly home mortgage tip here on this one, I want to talk about home buyer planning sessions. This is something I've been doing a lot more of, it seems like, in the last month with home buyers that know that they want to buy, might be 1 to 2 years out. Now, most of the time, getting in conversations with these individuals, they think, oh, I don't know, I shouldn't have a conversation yet. I'm not ready. It's going to take some time. I would strongly encourage you to get in front of them, starting just letting them know, hey, you can do a free soft credit check. I'm happy to do those strategy sessions, even if they are 2 years out. But the majority of the time, people are much closer than they thought. We can help get them there as far as, do they need to focus on credit score? Do they need to focus on down payment? Do they need to focus on income, paying down debts? All of those things we can help them speed up with a very low pressure conversation. So great tool for the tool belt. And I'd say start emphasizing that conversation around helping people get in conversation now that don't think they're ready yet, and they're maybe wanting to buy in 1 to 2 years down the road. So happy to offer that for clients. No application needed, just a conversation. Can do a free credit check if we need to. Next up, we had the Federal Reserve meeting this week, and they did decide to leave interest rates unchanged with no cut and no hike. Several members of the Fed dissented on the vote, though, in favor of a hike in the Federal Reserve funds rate of 0.25%. Fed Chair Warsh emphasized the Fed is still committed to bringing inflation down to their 2% target. This is core PCE inflation is what they're basing it off of. He was also intentional about saying the Fed is making every decision on a case-by-case basis and not trying to forecast what they will be doing in the next 2 to 3 months and kind of release their decisions, but letting the real-time data dictate what they do from one meeting to the next. Speaking of inflation, we got PCE inflation for June, which fell 0.1% for the month, in line with estimates. The year over year fell from 4.1 to 3.7%, while the core reading, which strips out food and energy prices, rose 0.1%, but still below the 0.2% estimated for the month. Core PCE fell from 3.4 to 3.3%. They also announced they'll be changing the methodology for several components of the number in August, which will be released in their September report. These changes should be lowering the PCE readings by as much as about 0.4%, which would be helpful in reporting a more accurate inflation reading. Next, Apartment List reported July new rents are up 0.2% for the month. This is for new rents, not for renewals, and rental prices are down now 1.1% year over year. The vacancy rate has come down to 7.2%, only down slightly from the peak of 7.3% that we saw in February. Next, we have oil prices are lower after US and Iran paused attacks over the weekend. Last week, we saw an escalation of several attacks after there was a ceasefire. So now a little bit more calm. Oil was down over 5% to about $84 a barrel after that calm. Welcome relief in oil prices there. And lastly here, Shiller and FHFA home price appreciation came out for May, because it's always a couple months delayed. We're showing home values up slightly. Shiller showed a raw number of 0.6% gain in prices for the month alone on an unadjusted basis, and then after seasonal adjustments came in flat for the month. Year over year, home prices rose from 0.8% to 1.1%, and then FHFA showed home values up 0.3% after seasonal adjustments and up 2.2% year over year, an increase from the 2% in the previous report. One thing to keep in mind, even though Shiller showed an adjusted basis of flat for the year or for the month, the actual prices did increase 0.6%. So it doesn't help to tell your clients, oh, home prices were flat, if on a national basis, there is actually an increase there. So the annual adjustments, that's just mostly for modeling purposes, is really the unadjusted raw numbers we're looking at to see what has happened with home prices. As always, hopefully this is helpful. Have a fantastic weekend. We'll see you next time. Take care.